Hi, everybody. My name is Adam Harris, and welcome to IC Markets Market Commentary. There are a few charts that I want to take you through, and although it seems a bit counterintuitive, I'd like to start off on the monthly time frame to explain my reasoning. So I'm going to start off here with euro dollar here on the monthly, and a couple of things I want to highlight is that although we had a very strong US dollar and weaker euro throughout 2022, we have subsequently retraced or corrected through parts of 2023 and have now arrived at previous levels of support to find resistance. We have produced a strong bearish candle. We also have the 50, 20, and 10 moving averages in a bearish formation. And we have this bearish candle forming in the sell zone. That's the area in and around the 10 and 20 moving averages. So traditionally, when we get this type of formation, often if the next candle breaks the low of the bullish candle or bearish candle, I beg your pardon, then there is a high probability that the market will continue to the downside. However, we'll need to see how that unfolds because we also have a little bit of a support level where we are right now and need to see if the market is going to follow through on that. But if I go ahead and have a look at sterling as well, so looking here at GBP against US dollar, we have a similar formation and the market is already starting to push low. And again, if I go through to the Australian dollar against the US dollar, we've got a similar formation again. So we have this bearish candle and a follow through from March through over February. And the same thing here for the New Zealand dollar against the US dollar. Then it's inverted. If we go have a look at dollar yen, you can see the price has corrected very similar to the US dollar, this behavior. It's pulled back into the moving averages, which are on a bullish formation, has produced a bullish candle. And March has already broken the high of February. Let's just zoom in on that so you can see that. So what does this mean? It does hint at the possibility that we might see a return to behaviors possibly that we had throughout 2022 if this is setting up to continue. And this pattern is evident if we look across all the majors. So there's no doubt it's the US dollar that is causing it. If I move across and have a look at gold, I can see that gold has been battling with resistance right now, and it also appears a very strong bearish rejection candle. And similar to the currencies, we could see a follow through, especially if that dollar gets stronger, we could see that push lower. Then if we move across and have a look at the global indices, we start off here with the Dow, the US 30. You can see that also we finished with a bearish candle in February. And we're potentially going to break the low of that. So that's looking a little bit bearish. We've got a bit of a rejection candle here again on the NASDAQ on tech stocks for February. So what does it mean? Well, they're all definitely coordinating. The dollar is the one thing that connects all of them. And the question now is, will we see a follow through on that? So I'm going to exclude the indices for the moment, but certainly with the currencies and with gold, for example, I'm going to be looking for opportunities to get in on this downtrend if it's going to continue. I'll be looking for breaks of the lows and pullbacks to test these levels of support as resistance. If I go ahead, for example, here and look at sterling, come down to the weekly, you can see we now have a fresh weekly downtrend. And again, on that daily, we've just broken through a major level of support. And so again, I'll be looking for continuation trading opportunities in the direction of the trend and looking for price to pull back into either levels of support or pulling back into the moving averages or pulling back into fib levels or perhaps pivot levels as well, and looking for those to go continue in that direction. So I'm going to leave you with that, some food for thought, and I look forward to chatting to you in the next video. Thank you.